Well, it is 10:30 a.m., and I would like to call to order the teleconference meeting of the Finance-Auditing Committee of Thursday, January 21st, 2021. Before we begin, please note that the meeting is being recorded. And Madam Secretary, can you please call the roll?
Thank you. Starting with Director Cochran.
Here.
Present. Director Grosboll. Absent. Director Moylan. I see Director Moylan. Director Moylan?
Here.
Thank you. Vice Chair Fredericks? Absent. Chair Rabbit?
Here.
Present. And President Parr?
Yes.
Present. Thank you. You have a quorum, and on the line you also have Director Garbarino, Hill, Naston, Theriault, and listening Director Snyder.
Great.
I'm going to confirm staff really. Thanks. I'm going to confirm staff. Thank you. Dennis Mulligan?
Present.
Present. Joe Wire?
Yes.
Thank you. Ava Bauer-Purpish?
Present.
Thank you. Kim Manolius, are you still on the line?
I am, thanks.
Thank you. Steve Miller?
Present.
Mona Babauta?
Present.
Kelly Hopper?
Present.
Jim Swindler? No longer online. That confirms staff on our line. And while I was calling out that role, Director Hernandez has rejoined us.
Great. And thank you very much, Madam Secretary. I appreciate that. Before I jump into the agenda, I wanted to thank President Parr for appointing me as the chair of this committee, following in the footsteps of former Chair Sobel. I hope that I hope to continue the good work of this committee, and I want to thank everyone who's online here with us today for the commitment to the road ahead as we pull ourselves from this pandemic and get back to hopefully business as usual. And although we have a reprieve that we are very grateful for from where we were, the future is really anything but clear at this point in time in our district. And this committee in particular may very well have difficult decisions ahead, and all the more reason to maintain our fiscal discipline as we have in the past. So thank you, everyone, for being with us today. I'd like to remind everyone to mute their phones until after the staff's presentations, and remember to unmute when we open up for director's discussion. After staff's presentation, I will be asking for questions, comments, and/or concerns on the item. If there are any, the Secretary will call on you accordingly. And after the discussion, we will ask for any public comment before moving on. The pages of the meeting packet are numbered on the bottom right-hand corner for ease of following along. Madam Secretary, please introduce the first item.
Thank you, Chair Rabbit. Item number 3 is ratification of previous actions by the Auditor Controller, and the packet of commitments, ratification, and investments is before you and begins on page 5. Leslie Murphy is on the line to provide a report. Ms. Murphy, go ahead and begin.
Good morning, everyone. Can you hear me?
We can. Thank you.
Excellent. Well, Happy New Year. I hope you'll all join me in wishing 2020 a fond farewell, and here's hoping to a less exciting 2021. But on that note, let's go ahead and skip to page 10 of your agenda packet. So as we stand at the dawn of the new year, let's take a look back at the last year, at least in terms of changes in interest rates. So on the top half of this page, we're charting the yield on the 2-year U.S. Treasury note for the 12 months ended December 31st, 2020. And it's really stark when we look at this graph just how far rates have fallen. So the 2-year started the year at about a 1.6% in yield, but ended the year at about 0.12 or 12 basis points in yield. And that steep fall off really occurred in early March as the Federal Reserve cut that overnight Fed funds target rate down to its current level of essentially 0. Now, in the present situation, that's actually positive for the market valuations of the holdings in the district's portfolio, because the market valuations of fixed income investments move inversely to changes in yield. So because yields fell so dramatically, your existing holdings gained in market value appreciation. So you're sitting on some pretty nice unrealized gains. So that's a good thing. Looking ahead, though, the challenge will be investing in an ultra-low interest rate environment but certainly this is something that we've been through before, and your portfolio management team will continue to monitor the markets and look for opportunities to add value where available. I think we can skip over the next few overview economic slides. I did want to focus our time on a few more directed slides this morning. So if we flip back to page 13 of your agenda packet, I did want to include some information on the recently passed $900 billion pandemic relief package. Now, this was signed into law by former President Trump on December 27th, just kind of under the wire to avert a government shutdown and release some additional stimulus to the U.S. economy. Some of the big ticket items of this package are funding for small businesses to the tune of about $325 billion. Included in that $325 billion number is $285 billion set aside for the payroll protection program. Now, there will be stricter terms applied to this program this time around, in that qualifying businesses may only employ up to 300 employees, and they have to have experienced at least a 25% drop in sales. Other big ticket items from this most recent relief package are direct checks to the tune of about $166 billion. So these are checks made directly available to qualifying individuals, $600 per individual, $1,200 per couple, and an additional $600 per child. Additional elements of this relief package include unemployment benefits, funding for schools, vaccine testing and tracing, transportation, and then some other more specific categories set aside for small banks that serve low and minority communities, childcare, and broadband services. Moving on to page 14, kind of the idea behind all of this stimulus is to make more money available in the economy, but it's really the consumer who controls how and when they spend that money. And as we know, the U.S. consumer makes up about 2/3 of our GDP, so the importance in consumer sentiment and consumer activity really can't be overstated. So the big question, I think, kind of heading into 2021 is, will the U.S. consumer spend our way out of the economic slump? So what we're showing on the first half of this page is the personal savings rate here in the U.S. from 2006 until now. So that top blue line represents disposable income. That bottom red line represents spending, and then the difference between the two is the personal savings rate. So you can see back in the spring, when that first round of direct payment checks were released to members of the American economy, we saw a significant spike in disposable income, where at the same time we saw a significant drop in spending because so many businesses were closed due to some of the lockdown guidance given regarding the coronavirus pandemic. So because of that, we saw a significant bump in savings. Similarly, moving to the bottom half of this page, household net worth has been increasing at a pretty rapid clip as well. In fact, the most recent number for the third quarter of 2020 came in at $123.5 trillion in overall household net worth. That's the highest level ever on record and represents about a 3% quarterly increase. So the way these numbers are calculated, it's kind of taking assets, so think cash, stock, and real estate, less debt, to come up with that net worth level. So on the surface of things, certainly it's a good thing that personal savings levels are high and that household net worth is growing. However, I think the question is it kind of impacting all of society? And I think the answer to that is no. And I know this is something that we talked about in the past, but I think it sort of bears further consideration. Over the past 4 decades, we've seen increasing income inequality here in the U.S. And I think the COVID-19 pandemic has really just exacerbated that trend. What we're looking at now is a K-shaped recovery where affluent Americans are doing quite well, especially those who have stock and real estate holdings, whereas millions of other lower paid workers, including retail and service workers, are getting laid off. They're seeing their income drop, and they're also potentially seeing they're having to dip into what savings that they have. So this is something that I think will become more of a hot topic leading into 2021 as we look at those consumer trends. For his part, though, President Biden and his administration is well aware of the income inequality, and as part of Biden's $1.9 trillion proposed stimulus package, which will be watching its course through Congress, he is proposing not just direct checks, but also some specific programs really geared to prop up lower income households, including tax relief and expansion of unemployment benefits and food assistance. So this idea of kind of consumer spending and when the consumer will start kind of spending our way out of the recession certainly is something that we will continue to track. Moving ahead now to page 17, let's switch gears a little bit and talk more about the district's portfolio in particular. There was no trading activity to report during the month of December because rates remained so low and because of strong investor demand for high-quality non-treasury obligations, so things like corporate notes, negotiable CDs, and other instruments that we can buy for you. Because there was such strong demand, there really were not a whole lot of pockets of value in the market in December. So we recommended that the district continue to maintain a higher than typical allocation to LACE in order to take advantage of the yield advantage on the LACE program. But nonetheless, your portfolio does, of course, remain in compliance with both California government code and your investment policy, and it remains well diversified by both sector and issuer. We will continue to monitor the markets for opportunities to add value, and we do think that we will see more value opportunities in the new year, so we'll be quick to act to increase the earnings potential of the district's portfolio. But as always, we will maintain our number one and number two priorities to maintain both the safety and the liquidity of your holdings with us. And that brings me to the end of my prepared comments for this morning. Happy to entertain any questions.
Great. Thank you very much, Ms. Murphy. Appreciate that. Are there any questions, comments, concerns from the committee?
This is Chair Rabbit, Director Terrio.
Go ahead, Director Terrio.
Yeah, Leslie, on page 14, trying to understand the personal savings graph, there's a red line and a blue line. What are they exactly? I mean, what's the difference between them?
Yeah, I'm sorry if this wasn't clear. I think we might have missed a label. So the blue line is disposable income. So when we see that sharp increase, that was largely as a result of the stimulus checks. The direct payment checks that first came out last spring. And then the red line is the spending rate. So we can see that red line also dropped off significantly in the spring, and that's because a lot of businesses were closed. So even folks who had money to spend, they didn't have opportunities to spend it. So that combination of increase in disposable income and a decrease in spending has really given us an increased overall savings rate.
All right, thank you. Now that makes sense. Thank you.
Thank you for the question.
Okay. Board members?
This is Bert. I have a question.
Go ahead, Bert.
Sure.
Chair Rabbit. Through the chair. Question on page 17. I noticed that asset-backed security are virtually all automobile companies. And I'm just wondering, given some of the unknowns in the market, that sort of thing, is it consciously because it's just automobile, or is that just what's sort of left over in the asset-backed, given that technology is such a dominant factor in comparison to those of the asset-backed securities?
That's a good question. Typically, we see a lot of activity in the asset-backed security space, either in autos or in financial institutions, or I think we have the Verizon in here as well. So admittedly, there has been an uptick in delinquencies on auto loans, which is kind of challenging the asset-backed security market a little bit. But we are only buying the most highly creditworthy, the most well-protected obligations, and we've been continuously monitoring the performance of the underlying collateral, and the numbers are still well within our comfort ranges. So we are still comfortable continuing to buy securities in that sector. And to your direct question, we just see a little bit more availability and a little bit better pricing recently in the auto space.
Thank you.
Thank you.
Secretary.
Oh.
I am not hearing anyone. Is there anyone else who has a question for Ms. Murphy or for Mr. Wire? Well, not hearing anyone. Thank you so much, Ms. Murphy, for your presentation today. Very much appreciated as always. And that concludes the discussion on this item. I think we are taking a vote on this. Is there anyone from the public wishing to speak on this item?
We have no speakers for this item.
That's great. Can I have a motion on the item, please?
Also move.
And did you get that, Madam Secretary? I'm not sure who that was.
Sure did. That was Director
And
Cochran.
may I have a
Yes.
second, please?
Second.
Great.
Got
Madam
it.
Secretary, could you please call the roll?
Thank you. And I want to note that Directors Frederick and Grossel did join us before Ms. Murphy's presentation, so we are a committee of the whole, so I'm going to be doing the roll call vote.
That's great.
We have a first from Director Cochran and a second from Director Fredericks on item 3, starting with Director Arnold. Absent, Director Fredericks.
Yes.
Yes. Director Garbarino?
Yes.
Yes. Director Grossel?
Yes.
Thank you. Director Hernandez?
Aye.
Director Hill?
Yes.
Director Maston?
Yes.
Director Moylan? Director Moylan? Absent. Director Rabbit?
Aye.
Aye. Director Stephanie? Absent. Second Vice President Cochran?
Yes.
Yes. First Vice President Tiria?
Yes.
Yes. And President Barr?
Yes.
Thank you. That motion passes 10-0.
Great. Thank you very much. The next item on our agenda is 4A, to authorize a budget increase in the fiscal year 2021 district division capital and operating budgets relative to capital project 1712, which is the transit scheduling system. The staff report starts on page 25. Ms. Hopper, please begin your report.
Thank you, Chair Rabbit and members of the committee. I am looking today for your approval for a budget increase in the amount of $520,000 for a capital project transit scheduling system, or typically what we call our HASTA system. This is the capital project. Back in 2017, the board approved the upgrade of the HASTAs from 2009 to 2018, and that work is going on, which will have a significant positive impact on the way that we schedule and do our operations in our bus transit division. The program is actually, the rollout program is in 3 phases, and we're on that way. However, there's some additional things that we want to accomplish as part of this upgrade, and that is principally in 3 key areas. One is to increase the staff labor to do some of these items, and then another one is to increase the scope of the service, which will include several new HASTAS interfaces and to modify existing interfaces, and then to, importantly, implement a new disaster recovery site, which will be cloud hosted for us. I just want to briefly mention the new interfaces so you have some context. A couple of those are going to be things for, there's a system or a module called Crew Line, which allows our bus operators, they'll be able to call in and hear and accept their daily work assignments as opposed to having to call an actual person in dispatch or whatever. So it will automate that feature. It'll also provide us with a very exciting feature for us, is a bi-directional interface, which will allow us to capture real-time data and interface it back to the HASTA system, as opposed to just sending the HASTA information out for real-time data. It will allow for that bi-directional interface, which will really help scheduling and bus operations plan and schedule a system that it meets the needs of our riding public. And then there is a third module that will require an interface, and it's called Rider. And what that will do is that will allow us to capture passenger analytics from our automatic passenger counter, and it will interface back that will allow us to have a more comprehensive view of schedules versus ridership, and then the real-time piece that would tag onto that. And then importantly is a disaster recovery module, which we critically need because HASTIS, as we all know, is a critical infrastructure system of the bus operations. So it's important that we have that up and running. So, and then finally there's $120,000 of that $520,000, which will be for the operating cost of hosting that site. And I'm available to answer any questions you may have.
Great, thank you very much. Are there questions for Ms. Hopper on this particular item?
Mr. Chair, may I be recognized? This is Director Hernandez, please.
Please.
Thank you, Chair Rabbit, and through the chair to Kelly Hopper. Thank you for your report. Kelly, I had a question. You outlined 3 specific components that need to be funded. My question is directed to the, I'm interested in the new disaster recovery site. Is that a website? Can you tell us more about that disaster recovery site, please? Thank you.
Absolutely. I'm sorry. Absolutely, Mr. Hernandez. It is a cloud hosted that would allow us. We had about a year ago, we had HASTIS went down, and it caused a lot of angst, as you can imagine, for the dispatch as well as the operation of the bus system. And it really reiterated the point that we need a disaster recovery redundant system that would allow us to immediately switch over a fail-safe mode, very similar to generators when you think about it from an electricity component. And so what this will do, this will allow us to replicate our system in an offsite cloud-based solution through Microsoft, so that if we ever did have a fail, that we would be able to have an immediate switch over. And it would also maintain the integrity of the data.
Thank you. And just a general question, in terms of how things operate, why were these 3 items not included in the original budget? How did they arise after the fact? Thank you.
Thank you. Crewline was a module that was an option that we could or could not have could or could not have implemented originally when we were going to roll out with HASTIS. That was not under consideration. In our new world, as you can imagine, automation is so much more important than the face-to-face. So they wanted to implement that. Real-time data through the init system, that we realized that while it's great to download the HASTIS information into the real-time base for real-time, it was very important that we actually see what's happening and get that bi-directional. And so BUS and the IT system believed that that was important. And then the last feature is with the rider is, do we have better rider analytics for our automatic passenger counting? So those were just, I believe, the best way to explain it is they were emerging. We had some idea of what some of these items were, but then there was emerging need as data and technology advanced to provide some additional capability in reporting.
Thank you very much. And if I could, one last question to Kelly. With regard to these changes, the new automated crew assignment system, et cetera, have our bargaining units been consulted in terms of any of these changes? Are any of these changes affecting the terms and conditions of any agreements? Thank you.
Any change in work assignment we will meet and confer with our bargaining units. As of this time, I don't know. I would have to confirm with Mona if we've actually had that meeting, but there is no, it is an efficiency, but anything that would have changed to work conditions or work duties, we would meet and confer with the union.
So am I clear in understanding that none of these 3 items, the increased staff labor, the increase of the scope, or the new disaster recovery site, none of these 3 items impact the terms and conditions of any of our bargaining units? Is that correct?
You know, I don't want to just speak out of turn. Would it be possible for me to follow up with you? I do believe there are no changes, but I'd feel more comfortable talking with my team and getting back with you if that's possible.
Yes, thank you very much.
Great, thank you. Madam Secretary, are there other questions from the directors?
Directors, do we have any other folks who have questions for Kelly on this item? Hearing none.
Thank you very much. And thank you again, Ms. Hopper. I think I was looking at the date of the first draft being May 2017, so we're well over 3.5 years, and I think technology changes along the way, as do needs. And so I appreciate the report today. Before we take our vote, is there anyone from the public wishing to speak on this item?
We have no speakers on this item.
Great. And can I have a motion on the item, please?
So moved.
I'll second.
Can I get a second? We have a motion and a second. Madam Secretary, can you call the roll?
Thank you. We have it first from Director Fredericks and a second from Director Cochran on item 4A, starting with Director Arnold. Absent. Director Fredericks.
Yes.
Yes. Director Garbarino.
Yes.
Director Grosball.
I will vote yes, but I'm hoping that we get a response to Director Hernandez's question for the meeting tomorrow. Thank you.
Thank you. Director Hernandez.
Thank you, Madam Secretary. My vote is no for the time being, and we'll see if things change tomorrow. Thank you.
Thank you. Director Hill.
Yes.
Yes. Director Maston.
Yes.
Yes. Director Moylan.
Yes.
Yes. Director Rabbit.
Aye.
Aye. Second Vice President Cochran.
Yes.
Yes. First Vice President Tirio.
Yeah, I'll be with Director Hernandez on this. No.
Thank you. And President Parr.
Yes.
Yes. Thank you. The motion is 9-2.
Great. Thank you very much. We'll move on. There are no actions to authorize related to grant programs for item 5. So we'll continue on to item number 6 to approve actions, relative to Clipper 2.0, the system integration with computer-aided dispatch automatic vehicle location. And for those of you into acronyms, that would be your CAD-AVL or your CAD-AVL system. The staff report begins on page 29. Ms. Bauta, can you please begin your report?
Yes, thank you, Chair Rabbit and committee members, and good morning. In the item before you, staff is requesting that you forward a recommendation to the Board of Directors to approve the following. Establish a new capital project for integrating the Clipper 2.0 system with Golden Gate Transit's CAD AVL system for a total project budget of $938,620. Authorize the General Manager to execute a professional services agreement with Innovations in Transportation, Inc., also known as INIT, in the amount of $787,119.34, and authorize the General Manager to execute the First Amendment of Contract Number 2019-D-009 with INIT in the amount of $17,664 for 1 year of maintenance. As background, Golden Gate Transit's CAD AVL system provided by INIT is a system of hardware and software that collects and reports significant amounts of data on our bus operation and fares. This data allows us to do things like report annual performance data to the FTA, which is a requirement for continued eligibility for federal grant funds, track ridership by bus stop or bus trip, and provide predictive travel information to our customers, among other things. The project before you involves integrating our CAD AVL system with Next Generation Clipper, or Clipper 2.0, which is the regional electronic fare collection system used by 18 Bay Area transit agencies, which allows for seamless travel and electronic fare payments throughout the region. Integrating the two systems will allow for a single point for bus operators to log on prior to departing on their first trip, which is something bus operations has actually been wanting for over 10 years now. It's worth noting that our bus operators have to juggle a number of processes every day, and this integration eliminates one. making pullout a little less hectic and more streamlined, and allowing our operators to focus more on safety and other service requirements. It also allows for the removal of old clipper hardware, resulting in fewer things to maintain, less pressure on our maintenance department, fewer things that can fail and impact revenue collection, more space in the driver compartment on the bus, and fewer operator movements that could otherwise lead to increased injuries. The integration will allow for better, more accurate data reporting and the modernization of the CAD AVL system, which guarantees ongoing support from INIT, our vendor. In addition, the integration keeps us in step with the region and other transit operators, allowing for greater integration with regional changes in the future. To successfully accomplish the project, the scope involves replacement and installation of a new mobile data terminal, also known as the co-pilot, where the operators will perform the single logon process. It also involves the development of customized software and testing onboard integration functionality with Cubic, the Clipper vendor, INIT, and key project stakeholders. Completion of the integration is projected for later this fall and is fully funded with federal and state capital grant funds. And with that, Mr. Chair and committee members, thank you for your consideration, and I'm happy to answer any questions.
Great. Thank you very much. I appreciate that. Are there any questions from our directors, please?
This is Director Maston. I do have a question.
Go ahead, Director Maston.
Thank you. On page 31, it states that looking for $17,000 in 2021 operating to cover a one-year maintenance contract. But on page 30, it states a deployment goal of mid-21. So shouldn't the one-year warranty cover from the beginning of deployment, which would be 21-22, and therefore one-year contract should be in the 22-23 budget?
Director Maston, I'm sorry, I'm going to have to check in with staff to confirm that, and I'll be happy to get back to you.
Okay, and another question would be, should we be looking at something longer than just an additional one-year contract?
For maintenance, I apologize. That's something I'll have to go back to IT and check in and see if additional maintenance may be needed.
Okay, thank you.
Yeah, this is Joe Wire. I'll step in there. We in these board reports, we generally show 1 year as part of a project. It's part of our convention here at the organization where we'll put in 1 year of maintenance as part of the larger capital project. And then the remaining years of maintenance will show up in your annual operating budget so that when you see the budget for a particular year, it will include some amount to maintain this particular project. In fact, we have numbers and numbers of different projects that have their maintenance expenses show up on a yearly basis. The overall contract could be longer, and the dollars will show up yearly.
Mm-hmm. Okay, thank you.
Anyone else have any questions? Not hearing any, we'll go ahead and I'll look for a motion to approve.
So moved.
I'll second.
And before we call the roll, I just want to make sure from the public standpoint, is there anyone who would speak on this item?
We have no speakers on this item, so I'm going to go into the roll call vote for item 6, and with the first from Director Fredericks and the second from Director Cochran. Starting with Director Arnold. Absent. Director Frederick?
Yes.
Yes. Director Garbarino?
Yes.
Yes. Director Grosball?
Yes.
Yes. Director Hernandez?
Aye.
Aye. Director Hill?
Yes.
Yes. Director Maston?
A tentative yes.
Tentative. Director Moylan? Director Moylan? Absent. Director Rabbit?
Aye.
Aye. Director Stephanie? Absent. Second Vice President Cochran?
Yes.
Yes. First Vice President Terrio?
Yes.
Yes. And President Parr?
Yes.
Yes, thank you. The motion passes 10-0.
Great. Thank you very much, everyone. With that, we'll move on to item number 7, which is the status report on the fiscal year 2021 budget. A brief staff report is found on page 33. And Mr. Wire, can you please begin your report?
Yes, I'm happy to. Thank you very much, and welcome, Mr. Chair, and to the committee. This is your monthly status report that we have been implementing this fiscal year because of the enormous changes we've seen to our finances due to COVID. I'll give you a sort of an update on the changes we have made to the report. Quickly, this updates through the first 6 months of the year, so we're halfway through the year. There are 2 major changes. One, we have increased the carryover amount from 1920 based on the final audited financial statements, and I'll talk about that when we look at the report. And the other one is that we have updated the projections based on the first 6 months of actual data, because we know more now than we did when we made some of those projections earlier in the year. Lastly, this report does not include any of the additional funding that you have seen in the papers, and that even Leslie Murphy mentioned this morning, that there would be money for transportation. This does not include that yet. That decision has not been made by MTC at this point in time, but the report did come out today, and I'll mention that when we look at the item. So if you could turn down to page 35, that's the actual spreadsheet we've been using, sort of as simple as try to simply keep our eyes on the revenue versus expense difference that we've been seeing on this budget from the very beginning. If you look, when we passed the original budget, it was a $98 million shortfall. When we last talked to you, it was about $48 million. There were a number of different changes that we had made. In fact, actually, last time we talked to you, it was in the 30s, but then we rescinded the potential layoff due to the increase in federal revenues that was expected. So now it's back to about 47. If you look at line 1, that's the carryover funds. And if you remember, these funds were, the district received CARES Act money last year. Most of that money was spent in fiscal year 1920. About 43 million of it was, and about 8 million, 7.7 million was carried over to this year that we're in now. But when we spent that 43 million, we were able to save some toll money that we would have spent otherwise. And so the decision was made that we would just move that toll money to this year and spend it this year. And that amount that was eventually moved over was approximately 18 million, and it's 8 million of CARES money that we had left over makes the total about 26.2 million. And that's what you can see in the columns there, the second and third columns from the right. Those are the monies that we were able to carry over. If you look at a report from earlier this year, that was about $23 million. So it increased by $3 million because of the audited changes that were made in our financial audit. And it was, as you guys know, was formalized in and brought to the board last month. If you, the next rows remain the same. These are entries that we have made projected for savings based on service changes that we've made and changes to the benefit packages and other things that the district has already made. Getting down toward line 9, in line 9, we had updated, what you see in front of you now, are updated ridership, that's bus and ferry ridership data based on the first 6 months. So we've taken the first 6 months and we've trended it out. I would say these are probably going to be more accurate than the ones that we had from the last change, which we did after the first quarter. So we've improved. These should be improved. Of course, they are projections. The future could look different. Those projections are listed in detail on pages 38 and 39, which are attached to this report. You can see them month by month, and we will be following them month by month. And if there's any change, in other words, if we were to overshoot or undershoot, those dollar differences would show up in the lines 11 that you see below. Right now, they're all set back to 0 because we've incorporated the actuals from the first 6 months into our new projections. Then line 10, we did the same thing for the bridge toll traffic. We updated the projections there based again on the first 6 months. And that, again, if there's any change any change where the revenues were to come in higher than we expected or lower, they would show up in line 11. So overall, those changes show us with a $47 million deficit. Now the good news. That is slightly better than the one we saw a couple of months ago, as I mentioned, and that's good. The second good news is MTC put out their report for their commission today, and in that, the Bridge District is listed to, if the commission were to act on the staff's recommendation, they would receive $20.3 million for what they're calling as a true-up. And it was a request made by the commission that the staff look, if new money did come available from the federal government, that MTC staff look at what actually happened to transit operators and make sure that if any of them didn't receive what maybe they should have received based on actual loss of revenue, that they get it back first. And so this first tranche of the money that's coming from the federal government in the bill that was passed on December 27th, that first tranche was just set for the true-up. And out of that true-up amount, the district is being recommended by staff to receive $20.3 million. If the commission acts on that next week and the district does receive $20.3 million, that, of course, would reduce this projected deficit by that amount. And as we talk about when we get to the future financial reports, the district, just as you sort of get an idea, through the first 6 months, the district was spending about $5 million more than it was taking in. So if you think about it, $20 million would get you about 4 months. And since the district ran out of its previous carryover money and started spending reserves in the middle of December, that would get us sometime to the middle of April. Also, the MTC has a second tranche of money, which is approximately $800 million instead of the little less than $200 million that's been given out as true-up. That $800 million will again be divided. The district would receive some portion of that. That is to be determined how much that is. That would then carry the district farther months into the future. And we'll determine how far that goes based on the amount that is received. The decision for that right now is slated to be made sometime in March. So before this resource that it looks like the district's going to receive the $20 million, before it runs out, we should already know what additional resources the district will receive from the stimulus bill that was passed back on December 27th by the federal government. Anyway, I will stop right there. Are there any questions on this table that I've gone over so far?
Any questions for Mr. Wire? Madam Secretary, do you hear anyone?
I don't believe so. I don't see anyone talking right now. Nope, I have no speakers so far.
Mr. Wire, thank you.
Okay, sorry, go ahead, Mr. Chair.
Was there a question? If there's no question, I just want to say, Mr. Wire, thank you so much for continuing to do this. Thank you for giving us the intel on the MTC true-up that we've been involved in, and 20.3 will look good on that column. And of course, that leaves us 26 and change to make up with the second tranche. Look forward to that as well. Trying to draw through this year as far as we can, anticipating the recovery will take place once the vaccine is more widely distributed, which right now wouldn't be too tough to achieve. But thank you for that. Does anyone else have anything for Mr. Wire?
Mr. Chair, this is Dennis Mulligan, the General Manager. Could I say a few words?
Please.
First, I'd like to thank Jonah's staff. They've been working tirelessly, the whole district has, but particularly Jonah's staff, in feeding information to MTC to prepare for the staff report that they send out today. It's important to note that the true-up is just 5 transit operators, so we're one of 5 that are getting money out of this first tranche. The second tranche will be a lot of competition for it. The goal from the second tranche, though, is to not get through the fiscal year because there may be no additional federal relief. The goal is to get sufficient funds so that we continue to make payroll and sustain our transit system going forward. And we're advocating with all the elected officials and other agencies in the Bay Area that all agencies should be treated fairly. All agencies should have access to cash, so some agencies aren't facing the specter of having to go through layoffs, while others have enough federal relief to last them for a year or longer. And so we will be continuing those efforts, but we want to be clear that our goal is not just to get through this fiscal year, because our projections are that we will start next fiscal year with a deficit, even if we were to balance this fiscal year. So it's vital that we expend as much effort and goodwill as possible to be as successful as possible to get as much money from this second tranche that will be decided in the next 2 months. Thank you.
Thank you, and I can attest to our general manager being a good advocate for the district in our conversations as an MTC commissioner, someone who will approve the final distribution. I do appreciate that, and I think what's true with the 27 different transit agencies in the Bay Area, all of them are funded slightly different. All of them depend on different sources of funds. Obviously, if you're general fund supported and or sales tax supported in most counties, those revenues have not gone down as much as certainly what has happened at the bridge, being so heavily dependent upon fares and tolls. So we're taking the hit, and I think part of the true up was really to make sure we acknowledge that those agencies that are losing the most money are actually getting reimbursed first and at the rates that they need to carry on before we, those that are losing less money start coming in with hands out. So it's been an interesting conversation. And again, I applaud MTC staff for the negotiation prowess that they have to make sure that they can work through that with all the different agencies and all the different individuals throughout the Bay Area. So thank you for that, Dennis. I appreciate it. With that, is there anyone from the public who'd like to speak on this particular item?
Thank you. We do have one speaker on this item, and that's Mr. David Philpell. Justine, can you introduce David?
Great.
Certainly. Mr. Philpell, please go ahead.
Can you hear me now?
Yes, we can.
Great. Okay, so the budget tracking report on page 35 now shows about a $47.1 million deficit compared to the prior 37.48 that I had in my notes. I think it would be helpful going forward to include a date and timestamp at the top of these reports, just for clarity, so I can be sure I'm on the right report. I understand that the second federal aid funding is not yet included, and I appreciate the update from Joe. I've not yet dug through the new MTC stuff from today, so that's very helpful. I don't know if that latest federal aid only covers the reduced toll revenue that goes to transit and not that portion of toll revenue that supports bridge operations. Nevertheless, I believe that staff continues to manage revenues and expenses using all available tools, and I appreciate that very much. I, for one, would like to preserve district reserve funds with more stable revenues and expenses going forward. I think that still requires tough choices and continued efforts on the district's strategic financial plan, both for the remainder of this fiscal year and in the future, next year and thereafter. And just finally, slightly off topic, since I don't often reference bridge traffic, I would note that MTC through the Bay Area Toll Authority and Caltrans are now moving to all electronic tolling on the state-owned bridges. And I don't think that this district gets nearly enough credit for taking the initiative several years ago to move to all electronic tolling, despite the labor issues and the technology and all the issues involved in that. But really, this district has been quite a leader in all electronic tolling on the bridge in this region. And BADA, MTC, and Caltrans can learn a lot from previous efforts here. So just wanted to thank the staff who worked on that for many years. Thanks very much.
Great, thank you very much. And I think you see a lot of heads nodding behind each phone that we're on today with that comment. So thank you for that. There any other public comment, Madam Secretary?
We have no more speakers under this item.
Okay, thank you. There's no action required on that item. We're going to be moving on to item number 8. We have the monthly review of Golden Gate Bridge, traffic, tolls, and bus and ferry transit patronage and fares. The staff report is on page 41, and Mr. Wire will present this item as well as 9A, which is the monthly statement of revenue and expenses. That's on page 49. And 9B, the monthly statement of capital programs and expenditures, is on page 67. Mr. Wire, go ahead.
Yes, thank you very much. As mentioned, there are essentially three reports here that we will go through. This is, as you remember, used to be, we would just talk about it quarterly. So we are at the end of the second quarter. I know now we've been hitting it every month because of the urgency of our financial situation. But we are at the end of the second quarter, halfway through the fiscal year. What you see in front of you, these reports are a little cumbersome because they include 2 months worth of data. That was because December's board meeting every year comes early, and we have not at that point had time to close out November. We are not able to give you November's data in December, so you end up getting November's data in January along with December's data. So that's what you see in front of you. So what I will end up doing is not necessarily any commentary on November's data. We'll just go right to December's data because, of course, December's data includes November already. With that, if you could turn to page 43 in your packet, and that's the December, that would be the December data, or actually it's both November and December data for the ridership and revenue and bridge traffic. And the importance of this one is really just to show you the consistency. And it's not a good consistency, but it's a consistency nonetheless. The district has often been very consistent, and it continues to be so, but at a lower rate than it used to be. In the upper left-hand corner, that box is bridge traffic. Those are the number of patrons crossing the Golden Gate Bridge each month in a southbound direction. And if you look at the bottom of that box in the total line over to the right-hand side, there is what I'm going to refer to as the actual versus actual column. It's the second from the right in that box. And that bottom line down in the total, where it's bold, says the traffic over the first 6 months is down about 35.6%. That means that we're getting about 65% of the traffic that we would expect to get. Not a good thing, but it's been consistent. If you look at the monthly data above, you can see it's kind of been consistent. It did drop off a little bit in December, and a little bit starting in November and into December, and that's continued into January. So it was a little higher when the weather was nicer and there was less COVID around, and it's been a little lower when there's been more COVID around. The expectation is that trend, given our first 6 months of data, will continue, and that did influence the way we looked at the projections going forward from the district. If you look over to the right, the box on the right, it is the revenue that's brought in by that traffic. Again, looking at the total line at the bottom of the box, the revenue is about 32% off. The difference there is slight, and it's primarily due with the fact that revenue comes in also from activities in our violation section, which have huge lags. So if we're receiving violation money today, it could be from most likely last year, and so that would show up in the cash requested, and that offsets it a little bit. But overall, this is very, very important for not only our bridge traffic and bridge funding of our bridge services, but also funding our transit services. As you know, our sort of rule of thumb, about half the toll money we collect is used to fund the bridge and its capital projects, and about the other half is used to fund transit and its capital projects. So if we're receiving 65% of our toll revenue and 50% of that's going off to the bridge per our mission statement to fund the bridge, then about 15% is going into transit, which means that's about 30% of what we would normally put into transit, if we had normal money. And that's the shortfall that you saw on the earlier item, is those monies that we don't have anymore to go from bridge over to transit. Now, other monies we don't have for transit, of course, are listed in the 2 boxes below, or 4 boxes below, but 2 rows of boxes. The first row of boxes, the middle ones, represent bus. As you can see, again, if we look at that same total line at the bottom of bus on the left-hand box, so middle left, says over the first 6 months, from actual to actual, we're down about 79%, which means we're running about 21% of the normal bus passengers we're getting today. If you look over to the revenue side, we're getting about 17% of the normal revenue because it's down by 83%. They're off a little bit for the primary reason is that the majority of the passengers we have today are local riders. They pay a lower fare traditionally than, and much lower, and in some cases, from our commute riders. Our commute ridership is way, way, way off. And obviously we have reduced the vast majority and eliminated the vast majority of our commute service because there are no commute riders coming in. And you can see that the drop in toll fare revenue means that not just do we have less toll revenue going over to bridge, we also have less bus fare revenue being collected directly by bus. And right below that, we have less ferry revenue being collected directly by ferry. And that's a pretty substantial amount because we fund over 50% of the ferry system based on its fares. If you look at the very bottom row of boxes, so the left-hand side, that box is for ferry patronage. Again, the total line at the bottom of the box, ferry patronage actual to actual, which is second to the right, is down 97%. So we're getting, over the first 3 months, about 3% of our normal ferry ridership. If you go over to the right-hand box and you look at the same number, ferry revenue is down close to the same 97%, which would be not surprising based on the patronage. That means that millions and millions of dollars in ferry revenue has not come in for ferry service. We have reduced ferry trips, so we have reduced some of the cost, but it's the monies that we have to pay for the fixed costs and the remaining service that we have and the salaries and benefits is not coming in. And you see it leaves a large hole there, approximately $10 million if you look at the total for the first 6 months. If you can see, last year we collected $10.9 million. This year we've got less than $1 million. So we're missing about $10 million just in the first 6 months from ferry fares. Very significant hole. And that's why the federal money that we talked about earlier is so essential in order to keep our employment up and to provide the remaining service that we do provide. Were there any questions on that? And then if not, I will move on to the next section.
Anyone have any questions for Joe?
Oh, okay. Let's move on.
This is Barb. I'm sorry, I couldn't get my thing punched here.
Go ahead, Director.
Joe, just a clarification. So when you're talking about the money that's coming in, you just made the comment that the money that's coming in is just to provide the service that we have remaining. Am I to believe that the implication then is that it isn't really to provide additional service?
The funds that, are you talking about when you talk about the revenue coming in, do you mean the revenue coming from MTC?
Yes.
Oh, that revenue comes to the district with the understanding, as Dennis pointed out earlier, of maintaining your employment and maintaining operations. But it doesn't come, it comes with the idea that you would retain your employment, but it comes with a recognition that if you don't have any riders or very few riders, it is okay to modify your service level to serve the riders as best you can. So the district has done that along with every other property in the Bay Area and probably every other property around the country. We have all changed our ridership in ways either reducing it directly, like we have, say, with our commute service, because we don't have commuters right now, or very, very, very few commuters. And we have looked at, and as Mona has talked to you, I think, before, about augmenting some of the basic service we offer on bus, because we actually have basic riders wanting that basic service on our bus system. So we have done that, and we have made those changes. So the money we get allows flexibility in the service change, but it is intended to maintain your employment.
Okay, thank you for that clarification.
Any other questions for Mr. Wire? Not hearing any. Why don't you go on, Mr. Wire, please?
Yeah, sure. If I could have you skip down a number of pages to page 50. We'll skip over the charts. You can look at them as you choose later. But if you could slip down to page 50, that is the next board item, and that would be 9A, which is the operating financials. And we'll look at the data on page 50 because that summarizes through December. The summarization through November is above, and you can look at that if you choose. If you have any questions, let me know. But we'll look at December. This is through 6 months. So these are just very much the summary. All the detail is in the charts that follow, and you have tables for both November and December, and they go on for a number of pages below in this report. And if you have any questions on those, also happy to get to those, but I won't go over those at the board meeting. Looking at this table, you have 3 sets of numbers in this report. The first set at the top of the page looks at revenues. And if you look at the revenues, and I think the most relevant point here for us is looking at actual data current year, which is the first row, 77 million, 77.6 million, to what we actually received last year, which is 131 million. And there's a $53 million difference there. If you, and that's through 6 months. So it's an extremely
Hello, you
large.
have reached the Mitel voice processing system. To leave a message.
Sorry, okay. I hope everybody can hear me. If you're looking at that, you can see through 6 months, we're already short that $53 million in revenue. Approximately $8 million, $8.5 million. It's a very significant hit, and that's why you see those very large numbers up above. It is also why the district needs the federal funds in order to maintain its employment or to maintain even the basic service that we have. Looking at the next set of data, which is expenses, the district hasn't decreased its expenses. If you look at the expense reduction, that's in approximately $12 million so far through the first 6 months. So it's $2 million a month. It's primarily in classification of salaries and fuel and professional services. So in other words, the reduction in the amount of service level we've had has enabled us to decrease some of our expenses. And then the last set of numbers is the result, salaries over expenses. The deficit so far is that first number. The actual deficit is 21 million. That takes into account the fact that we received and have booked already 7.7, almost $8 million in CARES money. So the actual deficit is about $29 million, and that's where I get the number that I was telling you earlier, that we're running about $5 million a month in shortfall. Something good just to keep in your mind as you're thinking about how future revenue will help us and how far future revenue will take us. If there are any questions on that's fine. Otherwise, as I said, I won't go over all the tables, and would move on to the capital budget report, which is 9B. But I'll wait if there's any questions on the operating budget.
Anyone have anything for Joe? Not hearing anything, Joe. Go ahead.
Okay, 68 then, page 68. That's 9. That's in your report 9D, which is report on the capital budget expenditures. They are progressing nicely. We're so far halfway through the year. They've expended about 54% of the annual budget. It's a little more than normal, but capital budgeting and capital expenditure are very come in fits and starts, so it's not surprising. For example, bus division expenditures look up very, very high, and that's primarily because they've started in on and done a lot of work on the remediation project up in D2, so that put up expenditures there. So we get, we have the expenditure. Any questions on that report? Otherwise, things are going well.
Anything for Mr. Wire? I'm not hearing anything.
Okay, that's it for then reports 8 and 9A and 9B.
Great, thank you very much. So there's no actions that are required for 8, 9A, and 9B. So with that, I think we're moving on to item number 10. That's the second quarterly report of judgments or settled claims, and it's found on page 77. And we have our attorney, Kim Manolius, to give us a brief report. Kim?
Thanks, Chair Abbott. The report is our second quarter report, as we do every quarter. There are 7 items on the report. 6 of them are workers' compensation settlements. 1 is a general liability settlement. 3 of those came through the Finance Committee, and the others were within the general managers or the risk managers settlement authority. So if anyone has any questions on these, I'd be happy to take them.
Great, thank you very much. Any questions, comments, or concerns on the review of the district's second quarterly report of judgments, settled claims? I am not hearing anything. Madam Secretary, you've not heard anything?
I've not heard anything.
So that concludes the discussion on this item. Again, we'll move on to item number, no actions required on this item, which is 10. So we'll move on to item 11 and 12, and that's the second quarterly report on authorized budget adjustments and budget transfers under the General Manager's Authority, as well as procurement actions. Item 11 starts on page 79, and item 12 starts on page 83 of your packet. Mr. Wire, can you give us a brief presentation on this, please?
Thank you very much. Yes, I will. The first item in front of you, item 11, there are just, as mentioned, your quarterly budget adjustments through 2 quarters, and there aren't any adjustments with financial ramifications that did not already come to the board. So you have seen all of these, but if there are any questions, feel free to ask them. And then on the next item, which is the one on procurement, we have still have, obviously, the operations of the district keep going. There are 2 sets of quarters here worth of data on the procurement, and I'm rather open to take any questions you would have on any of these particular actions. And that's it for items 11 and 12.
Great, thank you very much. Any questions for Mr. Wire on items 11 or 12? I'm not hearing anything, so I think we are good there. That concludes the discussion on these items. There's no actions required for 11 or 12. But before we move on, I should ask, is there anyone from the public wishing to speak on items 10, 11, or 12? Madam Secretary, is there anyone out there?
We're going to go and hold a public line before we go into closed session to also see if we've got anyone speaking under the last item of public comment. So we'll be prepared when we come back. Hang on 1 second.
Great.
We have no speakers for items 10, 11, or 12.
Great, thank you very much. So at this time, we will move to item 13 on the agenda, which is a closed session. Before we do that, I want to thank everyone for being patient during today's meeting. We'll be placing the public on hold for the duration of this item, and we'll reconnect the call after closed session. Mr. Manolius, can you please take us into closed session?
Of course, Mr. Chair. At this time, the committee will go into closed session for a conference of legal counsel regarding some existing litigation under Government Code Section 54956.9A, specifically with regard to the matter of Guy Morse versus Golden Gate Bridge Highway and Transportation District.
We're back in open session.
Great, thank you very much. Attorney Manolius, will you report out of closed session?
Of course. The committee met in a closed session for existing litigation under Government Code 54956.9A regarding the matter of Guy Morse as listed on the agenda, and the committee gave the negotiator appropriate guidance as to how to handle the existing litigation.
Great. Thank you very much for that report. Madam Secretary, do we have any members of the public wishing to address this committee under item 14, which is our public comment?
We do not have any members of the public on the line.
Well, again, I want to say thank you to everyone who's listening and all of my colleagues for your patience today, putting up with this first chairing of this first Finance Committee. But with that, if there are no objections, I think we have no more business. And if there's nothing for the good of the order, I think that we are adjourned until our next meeting of the Finance Auditing Committee. And the time right now is 11:44.